This is how I analyze the chart step by step. A lot of you guys have been requesting a video on how to analyze the chart because you guys know the concepts, but when it comes to real life chart, real life data, you guys forget those concepts, right? So just forget everything. Just normal. And how do you fix that problem? Is by listening and repetition, right? Repetition teaches the donkey. I'm not saying that you're a donkey, but just a quick quote, right? So yeah, let's get straight into it real quick before we move any further. Make sure you guys like, comment, subscribe, share, and join our Discord list down below. Right? So now let's get straight into this. How do I analyze a chart just like this? And keep in mind, my bias today was wrong, but I'm gonna teach you guys how I analyze it, right? So I'm not gonna teach you guys, what it is, but I'm gonna teach you guys, the analyzation, right? My bias today was wrong, but we can still analyze the chart here, right? So this is how the end result looks like. And keep in mind, it's not always going to look like this. It's going to be different because every new day is not going to use it. Every new day may use something else, right? Keep in mind. So all I'm doing here is this is the end result. Now, if you go to the I thing, is how do I analyze chart step by step? So what I do first is I come at the market around 5 to 6 a.m. Usually 6 a.m. is when I clock in. 6 a.m. clock in, and that is when I'm doing my analysis. So first step for me is 6 a.m. because a New York continuation, a New York setups can happen around 6 a.m. So that's why I wake up at 6 a.m. I wake up at 5 a.m. and I'm in a chart at 6 a.m. That's step one. Waking up at 6 a.m. Waking up at 5 a.m. Clocking in at 6 a.m. Analyzing the chart around 6 a.m. Especially for a New York trade, for a New York trade, right? New York session. And a step two is marking the daily candle opening price. That's a daily candle opening price. So mark the present day trading. So if I'm trading this day, I'm not gonna mark a daily opening price of the previous, day. I'm gonna mark the daily opening price of the specific day I'm trading. The 17 o'clock candle for the forex, right? So mark that 17 o'clock candle, then mark the 17 o'clock candle closing time. So this will give you a specific price range to look at, right? Specific key levels to look at because around here, there's key levels around here, right? Instead of this specific time, right? And now this will help you be more organized, right? Step two is marking the session you trade. So it says I trade New York session. I'm gonna mark the 6 a.m. candle and the 10:30 a.m. candle. And if I'm looking for a New York continuation, I will as well mark the 7 a.m. candle, right? So today, I wake up at 6 a.m. I wake up 5 a.m. Always. Wake up 5 a.m. 6 a.m. mark the same candle. Why we're doing that? This helps you guys be more organized, and this tells us about the time, right? So right when the time clicks, taps in. So right when it hits 6 a.m., you start looking to do analyzation, prioritization, right? Shit like that. And you're marking second step is you're marking the 10:30 a.m. Why do we say 10:30 a.m.? It's because of two things. That is when the market likes to do purges. That is when the market ends the purges time, right? So that's when the time purge, as you guys know, time is a point in price. Everything must align. Draw on liquidity, market context and market narrative, and a key level and a CRT, right? Once they align, they must align their correct time, right? So that's what I say. Time is more important than price. Because they could happen outside the kill zone and not work, right? And if you're more advanced, you would know, you could trade anytime you want, right? But you would know trading lunch and near session is way better than trading session, right? But you would know in the future, if you're more advanced, you would know, okay, today was a big ass news, something happened around, EU or something happened around USA. There was tariffs happening, so market did a big volume in that specific time. So that time could be used as a session for you to trade, right? So you can look for a setup, long or short or whatever, right? And after that renting, the next step is all we're doing is looking at the higher time frame, draw on liquidity, especially the 3 month, or I mean, you could look at the 6 month, 12 month, 3 month, monthly, weekly, daily, 4 hour, right? Do not look for a 4 hour drawn liquidity. Look for a daily and above. I suggest you guys look for a daily and a weekly. And sometimes 6 month would matter, the monthly would matter, 6 month, the 3 month would matter, the 12 month time frame would matter, right? Right now, at the time, the 6 month time frame would matter because the 6 month CRT low got souped. We're going to 6 month CRT high, and a daily time frame, looking for a daily KOD to the 6 month CRT high, right? So that as well, right? So, but most of the time, daily and the weekly. So the next step is look at the weekly time frame. And keep in mind, my daily box today was wrong, but I'm still gonna do it, right? I'm gonna show you guys how I do it here. So all I would do is look at 6 a.m. when I clock in, everything else. The next step is I look at the weekly time frame. Okay, where is the weekly time frame at right now? Is what is it looking to do right now? Okay, at the moment right now, I see a weekly ERL to IRL, this fair value gap. It will retrace there? No. It will leave this gap right over here, right? So this gap is going to be the retracement for the next week. Because next week is the fourth week of the month with the market, which the market will do a retracement, right? So ERL to IRL, right? And as well as see a weekly SMT CRT to the downside. So now I'll mark this, high and low. So now we got a weekly time frame, drawn liquidity, right? Which could be false, keep that in mind. But I said my daily box today was wrong. So the next step is go to the daily time frame. Now daily, you're looking for way more, context. You're looking for way more narrative, context, and drawn liquidity because the weekly has less candle than daily. The daily candle has way more candle than the weekly, right? So on a daily, now we're looking for multiple things here. Candle ranges, CRT. We're looking for a daily ranges expansion, daily ranges equilibrium. We're looking for active candle, which is daily, which is the IRL to ARL. We're looking for, that's all, right? We're now looking at in a daily time frame. We're not going to look at the order flow. At the 4 hour time frame, that's gonna be the next step. But the daily time frame step is looking at those aspects, right? So now all I'm doing is, as I said, the concept I taught you guys, I'm looking to market down in a market here. So how do I know that this is going to be a expansion daily range? Is simply by going back in the chart. So now I'm looking at a chart, previous chart data on a daily time frame to analyze the market here. We have a low that got souped. We have a high that got souped. So, and we made a stable low. Then we tended to make a stable high here. So OT daily range happened here. Discount of the daily range got met. So now we're going daily range high. So this is the expansion. Expansion is simply daily range is there. Market gets daily range, right? 2% retracement from here, right? From this low to this high that gets created. Now that's an expansion daily range, right? So expansion daily range got created right over here. Marking that out, getting a, saying that this pip retracement and just customizing it right to my favor. And what else I'm doing here? As I said, I'm not looking for one thing only. I'm looking for multiple things. I'm looking for weekly profile. As I said, candle ranges, CRT, active key level, equilibrium, daily ranges, expansion daily ranges, right? I'm looking for all of them, right? The next step I'm looking for is not the next step. Now we're looking for, as of right now, what I see is a ERL to IRL. Keep in mind, my box was wrong, but I'm still gonna show you this example, right? But if I were to say my box is right, I would have been a KOD IRL to ERL, a KOD to the higher different key level, which is the 6 month CRT high, a classic expansion profile 1 to the upside, Tuesday low of the week, right? That's for the actual right market context. But for the bearish market context, would be like this. Now I'm looking for a counter range. I said counter ranges, ranges, shit like that, right? Now we have a SMT, CRT to the downside right over here, right? So we have our counter range right over here. I have another counter range right over here as well. We have another CRT to the downside. So now I have my daily context. One last thing we're forgetting is the classic expansion profile 2, which is the weekly profile, which is the Monday high of the week. Will this Monday be protected? Probably not, because I said my boss was wrong for the day, but I'm teaching you guys on a wrong day and a right day, right? So now, since we have a daily, the next step is 4-hour time frame. 4-hour time frame, I'm looking for context, narrative. That's what I'm looking at, and I'm looking for a counter range to execute on. I'm looking for a range to execute on. I'm looking for a market context and to to long it up to the higher different draw on liquidity. And at a 4-hour time frame, I'm looking for way more things here now. Instead of just looking for counter ranges, daily ranges, I'm not just looking for counter ranges. I'm not just looking for ranges. No, what I'm looking for is counter ranges, equilibrium, daily ranges, expansion daily ranges, order flow. I'm looking for daily profile, weekly profile, SMT divergences, right? As well in daily time frame, we're looking for SMT and daily time frame as well, right? So that's what we have. Now, for our time frame, we have way more option. Now look at those concepts here. Those concepts has a low gas soup and a low gas soup and a high gas soup, stable low and a stable high. Premium discount. Okay, that's one narrative. 3 downside. 4 range high, 4 range low. How's that range? Bullish candle. How's that range low? Bearish candle. Simple as that. Eventually, you're automatically in range. Range high got soup. The narrative. Next narrative is a New York reversal profile 1. When accumulation, in-position, not expansion. This could have been, it would have been more of a New York continuation. But as I said, my bias was wrong. For an actual way for the day to be, our actual bias was actually bullish, right? If you go daily time frame, daily IRL to ERL, daily KOD to the higher different key level, a classic expansion profile 1 profile, Monday low of the week, Tuesday low of the week. 4-hour time frame for the correct bias here, right? So now we're doing 4-hour time frame. We know that we have a 4-hour bullish order flow. Looking for way more than just, those things in a higher time frame, because the 4-hour time frame has way more candles, right? So on the 4-hour time frame, we're looking for a near continuation to the upside. We have a 4-hour IRL to ERL. We have a 4-hour SMT to the upside. We have a 4-hour KOD. How is the KOD here? Because the daily time frame. So this premium and this daily range is the premium. Time doesn't matter because of the KOD, right? KOD doesn't care about the daily ranges and ranges, right? No. He cares about the ranges, but he doesn't care about the daily ranges and the expansion daily ranges, right? So you see now building up narrative here. Okay, we have a additional day, so I'm looking for a negotiation. Now we'll look at the lower time frame to execute this trade. 10-minute. So now we have our context. Now the next step is, once we have the 4-hour, we're looking to have the SMT with the counter, because we're always entering out of ranges, right? So we're looking for a range to get either soup or a SMT. So in this case, you got a SMT. So all we're looking for is execution. Execution is gonna occur right over here. So since we have SMT with the low here, you can see 5 a.m. low got SMT, the 9 a.m. Right, so we have SMT divergence. We'll call that a pair. GU. Now all we're doing marking that out is we're waiting for execution now. Since it's a 4-hour. Next step is since we have a 4 now, from 4-hour we move down to the 5-minute or 15-minute to execute a trade. In this case, it would be 15-minute time frame, because we have a 4-hour CRT. We're executing a 15-minute time frame here. Execution occurs right over here, right? Because you tap tape once. That will be the model 1, and we're elongated up higher from here. right, to the upside, which is the 4-hour CRT high. And will this, you're probably wondering, well, T, what if you took this trade? I would have not taken this trade. I will explain why here just in a second. Multiple reasons here. First, take profits here, which offers a 2RR, yes. But as you can see here, the wick is overtaking the body. Yes, the wick will make us miss setups, but it gives us more RR because the RR is way more important. The RR is literally the most important thing here, right? So we had a rejection block entry that we're looking to execute out of. So instead of going for a 2RR, we could have gone for way more on this. But you never got executed here, though. Keep that in mind. And on this day, I would have not even taken it straight. Why? As I said, my box was bearish, right? And second of all, is figure to lower time frame. I was looking for an hourly CRT to execute straight out of. Hourly CRT, right? Because we're looking for a near continuation, so we can use the hourly CRT as well here. So we're looking to execute it straight up to the upside here. Buy from here, right? Now, is you either from the second step after you get your narrative on the 4-hour time frame, once you get either a pairs of the CRT or a SMT on the 4-hour candle range, right? Or you can go to hourly time frame depending on what day it is. If it's a near continuation, it will usually high likely be an hourly CRT. Sometimes it'll be a 4-hour, in this case a 4-hour CRT as well. So yeah, keep that in mind as well. So now if an hourly CRT here, we're looking for a 5-minute entry. And the 5-minute entry would have been a stop loss, right? You can see enter the soup, the low got souped. This is low, higher. Eventually you can see price did offer you the entry and you got stopped out right around here, right? You get stopped out. You blame the market because, you know what I'm saying? My boss was bearish today, right? And what have I known to be a bullish bias throughout the midday? No, because, you know, adapting, right? So after the market ended, then I was okay. I could go bullish bias tomorrow because I need the confirmation, right? So you enter the trade over there, you could have stop loss. You re-enter the trade here again after the news, you know, the stop loss. Eventually, market gives you the setup right around here, right? So after 2 losses, you make a good amount of profit, but after those 2 losses, you never get a setup because the market closed below it, right? So you're just looking for using a 15-minute candle and you're break even because you go for a 2RR here, right? So yeah, that'll be for a long setup. And this is how I paralyze the market. This is how I analyze the chart every single day. This is how you can too, is by doing the simple steps. And the last thing is once you execute the trade, so let's say I'm looking for a long trade here, right? Let me see. If I'm logging a trade here, right, to the upside, once I execute a trade, let's just say market, you know, goes up, taps my entry, right? So whatever it does from there on forward, I'm going to do one more step. The last step is set a stop loss trigger and a set a take profit trigger. What I mean by it, set an alert. I set a alert on the take profit, set a alert on the stop loss, right? So everything else doesn't matter. So now you have a chart unless the market hits your stop loss, you will take profit because you want to, you know, if this helps you, you know, manage the trade easier without having or being emotional. So that's how I analyze the chart. Thanks for watching. See you guys later. Peace out.